Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 28th, 2025, we're diving into the S&P 500, represented by its ETF, SPY, at a truly remarkable juncture, blending the latest news with detailed chart data. Current headlines are buzzing with overwhelmingly positive sentiment, as S&P 500 futures are showing robust gains, setting the stage for what major financial news outlets are calling a hectic and huge week for global markets. A significant catalyst generating optimism is the freshly announced UC trade deal, a development poised to significantly boost global economic confidence and, inherently, equity markets. Adding substantial weight to this bullish narrative, Oppenheimer, a leading financial institution, has confidently lifted its S&P 500 price target, boldly predicting a third consecutive year of impressive 20% gains for the broader index. This wave of optimism follows SPY's consistent performance, having closed higher for the third consecutive week, successfully carving out fresh all-time highs right before the commencement of this pivotal trading period. Now, let's transition to the daily chart to visualize how these powerful macroeconomic forces have directly influenced SPY's price action over the past year and a half. Observing the broader trend from March 2024 right up to the end of our data on July 25, 2025, SPY has unequivocally demonstrated a powerful and exceptionally consistent long-term bullish trajectory. A critical point of interest on this chart is the sharp, yet swift, correction we experienced in April 2025, where SPY saw a notable dip from around 565 down to a low of 481.8. This precise level at approximately 481.8 proved to be an incredibly strong and durable long-term support, effectively marking a significant capitulation and a subsequent reversal point for the index. The ensuing rebound from these lows was nothing short of spectacular, with price not only recovering but swiftly moving above the psychological 500 and then the 520 levels, validating intense buying interest at these discounted valuations. The candle specifically on April 9, 2025, stands out, closing at 548.62 and accompanied by an enormous volume of over 241 million shares. A clear indication of strong institutional accumulation and a powerful market bottom. Since that crucial turning point, SPY has resumed its climb steadily, systematically breaking through all previous resistance levels to confidently establish numerous new all-time highs. This sustained upward movement perfectly mirrors the overriding optimistic market outlook widely discussed in financial news and analyst reports. To fully grasp the magnitude of this uptrend, let's now revert to the full daily chart view, encompassing all available data. Here, it becomes strikingly evident how every attempt at a significant pullback throughout this period has been decisively met with overwhelming buying pressure, consistently leading to higher highs and meticulously maintaining the robust bullish channel. This relentless upward movement serves as undeniable confirmation of the underlying strength inherent in the broader market, continually supported by robust corporate earnings reports and unwavering investor confidence. From a long-term investment perspective, this pattern strongly suggests that any short-term dips or corrections should ideally be viewed as opportune buying entries, provided that prevailing fundamental economic conditions remain broadly favorable. The very latest data point, representing an all-time high of 637.1 on July 25, 2025, puts SPY in uncharted territory, crucially meaning there's no historical overhead resistance to contend with from past price action. This characteristic breakout into unprecedented highs often acts as a potent signal for continued upward momentum, especially when synergized with a steady stream of positive news flow, precisely as we are currently witnessing. Shifting our focus, let's zoom into the 1-hour chart to scrutinize the more immediate and nuanced price action of the past couple of weeks. From July 7th to July 9th, SPY generally engaged in a period of horizontal consolidation, oscillating within a tighter range, primarily between 619 and 621, which indicated a phase of market indecision. However, an important development occurred midday on July 9th. We observed a clear, decisive breakout above the 624 level, demonstrating a powerful resurgence of bullish vigor, albeit followed by a slight, healthy retracement. Subsequently, from July 10th through July 14th, price action exhibited a classic pattern of steadily higher lows, gradually grinding upwards within the confined 623 to 625 range, a textbook signal of quiet accumulation by buyers. A particularly notable short-term reversal, or at least significant profit-taking, transpired on July 15th, marked by a sharp, pronounced bearish candle that saw SPY drop quite abruptly from 627.86 down to 622.14. This significant downward movement was, importantly, accompanied by noticeably higher volume, which strongly indicates increased selling pressure or concentrated profit-taking at those elevated levels. For short-term traders, it's crucial to acknowledge this area around 622 to 623 as a critical short-term support level. A successful retest where previous resistance around 624 to 625 transforms into new support would confirm its strength. If this 622 to 623 zone were to fail on a retest, it could suggest further downside in the immediate short term. Now let's transition to the 15-minute chart to gain an even more precise and granular view of the very latest price movements, leading directly up to the closing bell of July 25th. In the most recent trading sessions, specifically from July 23rd through July 25th, SPY has been demonstrating an exceptionally tight trading range, largely confined between the 634 and 637.5 price marks. This distinct pattern of very tight consolidation occurring at unprecedented all-time highs typically suggests one of two scenarios. Either incredibly strong underlying demand is absorbing every bit of selling pressure, or it's a temporary pause preceding a significantly larger, decisive directional move. It's worth noting that the volume on these extremely short time frames is comparatively lower when contrasted with the much larger swings observed on the daily or even hourly charts. This lower volume during consolidation implies that the current minor price fluctuations at the very peak might not yet possess the robust conviction required for a sustained breakout. From an intraday perspective, a key short-term support level has clearly emerged around the 634 mark, which has been tested and successfully held on multiple occasions, indicating its immediate significance. Conversely, the immediate resistance is the current all-time high, consistently hovering just below 637.5, a level which SPY has been persistently attempting to breach. A convincing and decisive break above 637.5, crucially supported by a noticeable surge in volume, would be a strong signal for another rapid leg up, whereas a sharp breakdown below 634 might trigger a deeper, albeit short-term, intraday correction. So, let's weigh the compelling reasons to be bullish or bearish on SPY, considering both the short and long-term horizons. From a long-term perspective, the bullish case for SPY is exceptionally strong. The index is firmly entrenched in a clear, sustained uptrend, relentlessly making new highs. Historically, significant dips are aggressively bought up by institutions and investors alike, as dramatically evidenced by the powerful rebound from the April 2025 lows. The very recent Oppenheimer target uplift, coupled with the highly anticipated positive news regarding the UCU trade deal, further solidifies this long-term optimism and provides fundamental tailwinds. For the short term, the market's current momentum remains unequivocally positive, with futures indicating continued strength and the index successfully grinding higher, suggesting persistent underlying buying pressure. However, short-term caution is certainly warranted for several reasons. SPY is currently trading at unprecedented all-time highs, which inherently makes it highly susceptible to sudden profit-taking events, and there are no historical resistance levels above to guide us. Furthermore, the hectic week Anticipated in the news and the approaching August 1st trade deadline for the UCU deal could introduce significant volatility and even potential sharp reversals if the final outcomes do not align with current market expectations. A sudden and substantial spike in selling volume, particularly on the daily chart during a downward move, would be a critical bearish signal, indicating a potential reversal or a much deeper, more prolonged pullback. Conversely, a period of continued low-volume consolidation at these elevated highs, followed by a powerful breakout candle on sharply increased volume, would provide strong reinforcement for the ongoing bullish argument, signaling further upward potential. For all traders, both novice and experienced, deciding when and at what price to enter or exit trades on SPY requires a keen eye on multiple indicators. Always prioritize confirmation. Resist the urge to trade purely on the anticipation of a breakout or breakdown. Instead, patiently wait for the move to demonstrably happen and sustain itself above or below key levels. Volume serves as a crucial validator. Robust volume accompanying breakouts or breakdowns provides strong conviction to the move, whereas price action on thin volume can often be misleading or short-lived. In terms of specific price levels, the immediate overhead resistance is the current all-time high, slightly above 637.5, a decisive breach of which could very well see SPY targeting the psychological 640 mark and potentially higher. On the downside, the 634 level on the 15-minute chart establishes itself as the immediate, crucial intraday support. A clear breakdown below 634 would likely lead to a test of the hourly chart's more significant support zone around 622 to 623. Should this 622 to 623 area fail to hold, we could then anticipate a more substantial retest of the prior consolidation region, potentially dipping into the 590 to 600 range, which previously acted as strong resistance. Further down, the foundational long-term support established during the April 2025 lows, near 481, remains an absolutely critical anchor level for long-term investors and a worst-case scenario target in a severe market correction. Lastly, remain acutely aware of the August 1st trade deadline as it represents a major, binary upcoming event. A favorable resolution could strongly propel SPY into new territories, while any negative or ambiguous news could trigger a significant and sharp pullback. To summarize our comprehensive analysis for today, SPY is undeniably trading at unprecedented all-time highs, significantly fueled by a prevailing positive market sentiment and the impactful news surrounding the UCU trade deal. Our examination across various timeframes has consistently revealed a deeply rooted and robust long-term bullish trend, with major historical support definitively established at the April 2025 low, hovering around 481.8. In the intermediate term, significant support levels are clearly visible around 622 to 623 on the hourly chart, while the immediate critical intraday support lies at 634 on the 15-minute time frame. The likelihood of SPY continuing its upward momentum and pushing even higher in the short term is assessed as moderate to high, particularly if the positive news from the UCU trade talks fully materializes and is met with continued investor enthusiasm, thereby reinforcing the existing bullish momentum. However, it is crucial to acknowledge that given its current position at all-time highs, a period of consolidation or even a healthy pullback remains a distinct possibility. This scenario becomes more probable if buying volume wanes, or if the impending August 1st deadline delivers unexpected or less than favorable news. Always keep a vigilant eye on any sudden and dramatic spikes in selling volume, especially if they occur concurrently with breakdowns below identified key support levels, as this would be a potent signal of increasing bearish pressure and a potential trend shift. Furthermore, continue to actively monitor broader macroeconomic data releases and stay informed on any further detailed developments from the ongoing trade deal discussions, as these elements are poised to serve as highly significant catalysts for SPY's future direction. That concludes today's exhaustive deep dive into SPY here on Explain the Charts. We hope this analysis empowers your trading decisions. If you found this video insightful, please make sure to give us a big thumbs up, subscribe to our channel for more expert analysis, and hit that notification bell so you never miss an update.